Colin, I know you joined us earlier in the month when you downgraded to Perform on this name. Your thoughts, given the activity, given the fact that, to Amy's point, you have seen some more headlines that speak more fundamentally to the business in recent days as well. Your thoughts on Tesla at these levels currently?
So there's a couple of really interesting things as we wrap up the year and get into 2023. First, this is going to be a year when the pretenders and the real contenders get washed out in the EV space. And so I think one of the things that we've been excited about with Tesla is just the technology leadership. And so as we look at that and look at how many folks really are going to buy EVs and what those unit economics look like, we see Tesla in a very strong position, and that has been a consistent view for us. Now the concern here is that as you have more options on the market and you have some incremental competition for Tesla, and you have Elon out, in and around Twitter, changing the consumer perception of the brand, that some of those folks decide to make a different choice away from Tesla, despite the product being advantaged versus some of their competitors. And that's the thing that really has been a concern for us. And so as we look at these fourth quarter numbers and kind of the intensity that we always see at the end of the quarter for Tesla, it's going to be very interesting next week when we see those results to see how many cars they produced and how many they actually shipped. And then as we look into the first quarter, we're going to be tracking very closely what happens in China as some of the rules shift in terms of the tax credits and other support that we've seen for the EV space, in the early part of the year, and how the sell-through actually works.
As we've seen the stock sell off, it's raised the question again of whether Tesla should be viewed as a tech stock or as an automaker. How do you see it?
There's, I think, three elements of the business. One, it's a material science company that's really done an enormous amount of innovation. And I think one of the things that got missed in the past week was the run rate on the 4680 production. I think that's a very big deal for this company as they move to a new battery and what it does in terms of range and performance for the vehicles. The second piece is the auto company. They're making cars and they're making specifically EVs. And that's the core part of the company. And then the balance of this is really around AI and what they're doing in terms of navigation with self-driving vehicles and all the other applications for AI. And so we really see it as a company that's really built on those three pillars. You could throw in the solar piece of it, but that seems like a sidelight at this point. But I think it's really more of a technology conglomerate that's solving some very, very important problems and very difficult problems, and has a corporate culture around innovation and meeting the challenge. And so we see them as more of a technology conglomerate, as I said here. But really the cash flow is really being driven by the vehicles, and so it's hard to separate out that cash generation from the auto market at this point.
Yeah, Colin, you referred to what goes on at the end of the quarter as the intensity around quarter end. So essentially trying to make presumably their volumes, and there's reports of these incentives to actually try to buy a vehicle by the end of the quarter. Does that place the 2023 consensus of close to 2 million vehicles sold at risk, the fact that it seems as if they're having to stretch, or do you think that that's a pretty comfortable number?
It's a number that I think is fair at this point. I think we need to see what the real rules are around the U.S. tax credits. Some of the sell-through in Europe is electricity prices are a bit higher than they have historically relative to diesel, for sure, as well as the implementation of some of the rules around zero emissions vehicles in certain EU cities. And I think this 2023 thematic is going to be around testing the market for EVs. You've heard a bunch of stories around folks that couldn't drive their cars because of the cold around Christmas. That's pretty disappointing for a lot of vehicle owners, and it's going to be a warning for folks to buy new ones. But I think this is a real test year that we're coming into, and so I think that the 1.92 million vehicles is a fair number for Tesla. But the question is around what's the cash flow to actually push those vehicles into the market. And the question for us is really around incentives for marketing and these discounts that we're hearing about. That gives us a little bit of pause around what the cash generation might ultimately be. We still think they generate an awful lot of cash, but it's just not going to be the upside numbers that I think some folks had hoped for.